Has inflation become the phantom menace lurking in the shadows of our economy? To what extent does it impact our everyday lives? And what do these changes mean for our financial future? The answers to these questions may just lie in the insights shared by Marc Faber during a recent interview with Eric Chumley. Faber, an esteemed economist and investment advisor, firmly believes that we are caught in an inflationary cycle. An invisible whirlpool, he suggests, that central banks are grappling to control. He sees the specter of inflation looming larger, not diminishing, and anticipates it will be a Herculean task to rein it in. The evidence, Faber suggests, lies in the bloated asset prices we've seen in recent decades, particularly in real estate. This inflationary trend has had a detrimental impact on the middle and lower classes, squeezing their finances and making home ownership an elusive dream for many. Faber doesn't mince his words when it comes to central bankers. He criticizes their reliance on monetary policy as a tool to control inflation. Instead of making tough policy decisions, he contends, they choose the easier path of printing more money, exacerbating the problem. So, how should one navigate these turbulent financial waters? Faber advises keeping a portion of one's wealth in precious metals like gold and silver. These assets, he believes, can serve as a hedge against inflation and unpredictable central bank policies. But that's not to say he shies away from equities. Quite the contrary. Faber's investments span across European stocks, Canadian and Australian mining stocks, Asian real estate stocks, and certain Latin American markets. He particularly sees potential in the Hong Kong real estate market, spotting discounts amidst the inflationary landscape. He also champions exposure to emerging markets, suggesting investors should aim for at least 15 to 20%. Faber himself holds around 70% of his portfolio in such markets, spurred by population trends and growth opportunities. Despite his concerns about market distortions, Faber cautions against shorting stocks in the present environment. The liquidity provided by central banks, he posits, fuels speculation and upside potential, making shorting a risky move. His guiding principles? Never place blind trust in politicians or central bankers, and always analyze investments in nominal terms, adjusting for true inflation. In essence, Faber views inflation as a formidable challenge, yet one that can provide opportunities for astute investors. By spreading investments across geographies and industries, and keeping a keen eye on the true impact of inflation, one can navigate the financial seas, regardless of how choppy they become.